Bloomberg Audio Studios.
Podcasts, radio, news.
Well, amid all of the optimism about a pro-business Trump administration taking over in late January, there's a lot of uncertainty when it comes to corporate America. And you have tools titan Snap-on, which mainly services professional mechanics, of course, calls on nearly 1 million vehicle mechanics every week and periodically calls about 300,000 businesses, and as such has a pretty unique view into the grassroots economy. So let's get to that now with CEO Nick Pinchuk, who joins us. Nick, first of all, Happy New Year. It's great to speak to you again. And
Happy New Year, Katie.
Let's talk about this uncertainty, because in your notes that you sent over to us, you talk about smaller mechanics and factory workers. Amid all this optimism, there's still a lot of question marks heading into 2025. Walk us through some of the main points there.
Well, look, I think the thing is that, I always said there was the financial and physical economy. The physical economy is like manufacturers and the people who work in those places, and that's even mixing now. If you talk to the individual technicians, the mechanics, the guys in the factory, the guys who twirl the wrenches and push the keys and stuff like that on diagnostic units, they're still pretty uncertain because their economy has been fairly positive all along. And so they recognize that. But what they are affected by more is by their feelings of the general environment. The two wars that keep continuing. The southern border, which is, kind of in chaos, they got a little better now, but it's still a problem. The idea of the tit for tat for China, the closing of the Red Sea that could lead to inflation. The idea that, okay, I'm looking at the prices and milk is still $4, over $4. That's up 30% versus pre-pandemic levels, and gas is up 18%, not year over year, but versus pre-pandemic. And then the election, I don't think anybody knows what the president-elect's going to do at their level. They keep seeing it. I think it's like I said one time, welcome to the Mad Hatter's Tea Party. This is more like a roller coaster, and you're in the front seat and you're blindfolded. You don't know where you're going. And so, he's mentioned things like Greenland. The hits just keep on coming. And so for that group, they are still uncertain.
Got to buy it.
So there's not much change. If you look at the more organized people, the managers of the garages, the manufacturers, they're more positive. They've moved. The National Association of Manufacturers outlook has moved upwards. It moved down in the third quarter around the election time. Now it's moved upwards. And I think it's because they think that there's a hope that this administration would be positive toward business.
Hey, I want to ask about your sales specifically, Nick. We were talking about Tesla because they delivered fewer vehicles in 24 than they did in 23. And I was just thinking about tool sales. Do you do better automatically when more vehicles are sold outright, or do you do better when fewer vehicles are sold because we're working more to keep the used vehicles on the road? How does your revenue relationship work with the auto industry?
Actually, it's like this, Matt. Our revenue is driven by the cars on the road. So to put it in perspective, this year the American auto industry is going to be about 16 million cars sold. The cars on the roads, almost 290 million. So the effect of the cars sold in any one year is a nit in our business. It can affect other pieces of our business, because in some cases we sell to the OEMs directly associated with launches of cars, and if they're more successful, then it works a little bit more for us. But the main business, selling to that 1 million mechanics, it don't make any difference. Over the long term, of course, it'll make some difference, and so that's the effect. But Tesla's view is whatever Tesla does doesn't really make much difference. It could make a difference if I think I've seen some of the analysis, and I think some of this is true, is that there's a rise in the popularity of plug-in hybrids over electric vehicles. Even in China, the Chinese are starting to make hay with those vehicles because they're not dependent on a charging infrastructure. And so therefore, if they move up over the long term, that introduces two different platforms into the cars on the road. That is, you have electric vehicles and plug-in hybrids, which are both internal combustion and electric vehicles. So eventually, that drives our business upwards because the changing of the vehicles is what makes our business go. Because every time they change, people need new tools, and that's music to our ears.
I want to also talk about what the sentiment looks like under the hood for smaller and mid-sized companies, because you're seeing this exuberance, of course, among the largest of companies on a lot of levels. the comeback of M&A, the idea of lighter regulations. But if you're a small to mid-sized company and you're maybe concerned about labor or about inflation, on average, do you think that the mood is better or worse?
Well, Sonali, look, I think the mood is clearly somewhat better. Remember, I said mixed. And you can see this in the National Association of Manufacturers indexes. They're moving upwards. It's a situation like this. They look at the administration as having focused on positive things for America. You know, if you're a CEO, small or large, you like to see emphasis on your strengths. What you want to do is build your strengths, not necessarily worry too much about your weaknesses or your flaws. And so you could say, look, what is the administration talking about writ large? It is talking about reducing the weight of government on businesses, small and large manufacturers, and even small manufacturers, because small manufacturers are paying a bigger penalty. The National Association of Manufacturers again says that the average manufacturing group pays $25,000 per employee per year on regulation. Now, you can believe that number or not. I think it's pretty accurate. But small ones pay $50,000. So they like to hear that. They like to hear the idea that the administration might make the most of a great American strength, that is the American worker, and emphasize manufacturing. They like to hear the idea, believe it or not, that they restore the strength that immigration has always been, or restore immigration as a strength for our common power. They like that because they use those workers a lot. What they worry about, though, is things like the detail. There's tremendous windage in this. For example, you have the idea of, well, how are you going to actually promote manufacturing? Are you going to be able to do the what's going to happen in the tax cuts as the taxes expire? Now, there's a talk about corporate rates. Well, me personally, I don't think they need to lower the corporate rates. They're very fine. Right now, where they are, they're about equal to other places for big companies. But small companies, which 93% of manufacturers are under 100 people. And so a lot of them are pass-throughs. So you raise the individual rates, that goes up. And if you eliminate the 199A deduction, 20% reduction on their EBIT, then that's a big impact for them. So they worry about that. They worry about the idea, well, what's going to happen with tariffs?
Right.
Tariffs are a big question, right?
Huge question.
And so you can do it two ways. You can have a tariff program which reacts to other countries which do bad things, subsidize and promote their state-owned industries, or you can do blanket tariffs. I think the former is the positive one, but they worry about the blanket tariffs.
Yep.
That kind of thing.
And the kind of trade war that may kick off, and then the turn to China that you could see. We've been talking about that in this program the last couple of days. Nick, it's never enough time with you. I hope we can get you in the studio next time you're in New York City. Snap-on CEO Nick Pinchuk talking to us. Happy New Year to you.